Welcome everybody to the Corporate Knights virtual roundtable on fast food and animal welfare. Today we're going to reveal a sneak peek at the findings of a recent benchmarking that we did of the world's largest fast food companies on animal welfare. And then we'll get into a conversation with some of the world's real leaders, both on the company side and on the finance side, who are moving animal welfare forward in significant ways. So first, a snapshot of the findings and a word about Corporate Knights. Just for any of you who may not have heard about Corporate Knights, we have been around since 2002. Our mission is to advance clean capitalism, which is a more sustainable form of capitalism. We published the world's largest circulation print magazine on sustainable business with a circulation of just under 150,000. And we also publish ratings on sustainability ratings on 8,000 publicly traded companies around the world with a transparent methodology focused on the impacts and outcomes as opposed to the policies. So first, a sneak peek. We did a study over the course of the summer, and we looked at the largest fast food companies on the planet. Most of them were publicly traded. There were a couple beyond the publicly traded realm that were just so big, we added them to the mix, including Subway is one of the examples. And we evaluated them on on 6 factors. We looked at their cage-free policies. So what percent of the largest fast food companies that are publicly traded, plus Subway and a couple others, have cage-free policies, their global operations, not just one country. We looked at that as well for the crate-free pork policy, the broiler chicken policy, and other significant animal welfare policies. And then we looked at how they were reporting and then who was on track to meet their targets in terms of the dates that they'd set in the thresholds in the countries. And I guess the takeaways from this, the good news is if we would have looked at this, say, 10 or more years ago, you wouldn't have seen the blue bar too far beyond 5%. So we now are at a point where most of the world's largest mainstream fast food companies recognize that animal welfare is an important business issue, both from a consumer perspective and also from a supply chain and a business risk perspective. And so the good news is we have a pretty good base and foundation to move forward on. The bad news, the flip side of that is, as you can see, none of these numbers are even over 50%. In some cases, on track to meet target is just 9%. So we can see that there is a big gap between the realization that animal welfare is a fundamental business issue, something that's been magnified and a heightened awareness has been realized, especially in this sort of age of COVID that we're living in, where no company wants to be part of a breeding ground for future pandemics, over and above the other animal welfare issues and consumer preference issues. And so there's a huge gap between the sentiment of business, the sentiment of consumers, the priorities of agricultural regulators, and what could happen, which would be we would see all those bar charts that we were looking at now be all the way over to 100%, which is somewhere where we think we can get. The good news is that the world's holders of capital, the leading agricultural banks, including Rabobank, who we have the Director of Sustainability with us today, Bas Reuter, and not just the social responsible investment firms, but yes, the social responsible investment firms and a broader array of investment firms, including many signatories from the Principles for Responsible Investment, who now count investors with over $90 trillion of capital. These folks who hold the purse strings now recognize this as an important business and systemic risk issue. And they're starting to put their money where their mouth is on the engagement side and also on the investment and the lending side. So this has a chance to create a virtuous feedback and really to accelerate and help close this gap that's been identified. We will be following up this snapshot with a full ranking of the 45 fast food companies that we looked at to be published later this November, after we've allowed the companies a chance to review the findings that we had as part of our rating and publications policy. So the focus today is going to be on how do we close this gap? How do we jump off the foundation that we've built and close this gap on animal welfare to prevent needless suffering of animals, but also to reduce risk in the food ecosystem and in the health system, as the COVID pandemic has made clear is a priority for everyone now. And so without further ado, it's my distinct pleasure to pass over the moderation reins to Adria Vassal. Adria is the managing editor of Corporate Knights, also the author of the acclaimed book series Ecoholic, which is one of the most detailed series of consumer publications that really help consumers figure out how to put their money where their values are. So Adria is a tough cookie, and I look forward to this conversation. And Adria, over to you.
Thank you so much, Toby. Appreciate that generous introduction. Thank you so much for everyone joining us today on the panel and for everyone joining us at home. We really appreciate your eyes and ears for this hour on this important topic. And we've got lots of questions to dive into. We're going to jump right immediately into them, as well as leaving it open for audience questions a little later on. And we're just going to start with one question essentially per panelist and then get going on an all panel discussion to keep things a bit more lively. And I thought I would start a conversation off with Rihanna Topan of HSI, Humane Society International Canada. Rihanna, thank you so much for joining us today.
Thanks for having me. It's a pleasure to be here.
Rihanna, animal welfare policies, as Toby has mentioned, are becoming increasingly mainstream. However, clearly there is a significant gap between leaders and laggards. The leaders are really embracing cage-free and crate-free pledges and starting to act on them. But we did find in our research that we received some pushback from some companies saying things like, well, cage-free eggs aren't actually better for chickens. And we would love your take on this because you do represent Humane Society International Canada. We trust your opinion on the issues related to animal welfare. How meaningful are these commitments to the welfare of animals?
Great question. Thank you for asking it. And I just want to start by saying how glad I am that we're having this conversation because animal welfare really has become such an important mainstream concern for the food industry. And policies are the first step that's really needed to prevent some of that needless suffering that Toby had mentioned. And so, you know, just in regards to that point that you mentioned, Adria, about how good these policies are and how meaningful they are. So when it comes to cage-free policies, for example, in particular, it's based in science that they are definitely better for animal welfare. And that's because cage-free systems allow animals to engage in more of their natural behaviors. It allows them to move more freely, to exercise, to socialize, to do some of the things that they would do in nature, like nest or forage for their food or perch on an elevated surface. And it's true that, you know, like with any new change or system, there can be a bit of an adaptation period, a learning curve. But over time, what we see with more management experience is that cage-free systems, for example, are substantially better for animal welfare than what a cage system can ever offer. And we see that through a number of studies. And that's why these policies are so meaningful. So first of all, it's because they alleviate some of the worst suffering that happens within the food industry. And second, because they affect a very large number of animals. So for example, when it comes to broiler chickens, which are the chickens used for meat, right? In Canada in 2019, chickens were approximately 90% of all of the land animals that were killed for food in this country last year. And that's huge. And many of those animals are suffering while they're alive. And that's an area where we can certainly be improving. And like Toby said, about 10, 15 years ago, companies started to realize that they have to have good animal welfare policies because consumers want to be able to trust that companies are buying food from companies that are not involved in any kind of cruelty. And we have to remember here that the biggest food companies in the world have the ability to influence how food is produced and how animals are treated, which is why good policies and practices are so important. And I think because of that, food companies also have a responsibility to be transparent about how responsible their business is. And I just want to mention as well, though, that to be meaningful, a company's animal welfare policy should certainly apply everywhere that it operates. So it should apply geographically everywhere a company is in an operation and to all of its operations. So whether they follow like a franchise model or something like that, it should still include all of their operations because consumers don't want to think or see that customers or that the companies they're supporting rather have an asterisk on their animal welfare policies. It should be something that's done across the board. And in spite of that, we don't see all the chains moving. So I think there's a changing recognition though there that this has to be a priority and that reputations are increasingly at risk if you don't have a good policy in place.
We did find that in our research that indeed a lot of chains are maybe moving in one country, but not necessarily bringing those policies even to Canada. Maybe they're just in the US, and certainly not in their global restaurants throughout Mideast or Asia. But there are some leaders on this front, and we are happy to share, while our full ranking is not out, we're happy to share that Shake Shack is a leading chain in the top 3 slot. And we have today with us Jeff Moscato, Senior VP of Supply Chain from Shake Shack. Jeff, thank you so much for joining us.
Thank you for having me.
Now, Jeff, many restaurant chains are saying that adopting these policies, just aren't really feasible. They're a luxury that they can't really afford to take on, that it's not really doable. But Shake Shack has already adopted cage-free eggs in the US and the UK and crate-free pork globally across your entire restaurant footprint. And you're the first global quick service restaurant to announce a timeline for shifting all your eggs around the world to cage free. So we're just wondering, really, considering all the naysayers that are out there, how did you make this happen? What are some of the challenges that you've had to overcome along the way and that you still face now as you're rolling out some of these policies globally? And can you do that all in, 5 minutes or less?
Well, thank you for including us in this ranking, and very humbled to be here and a part of this conversation. One of the things that has benefited us in accomplishing this is we started it when we were really small. So instead of waiting for us to grow to a certain chain size and then look back and make changes, this has been part of our DNA, part of our mission of Stand for Something Good since the very beginning. When we first decided to source never ever beef in the US, when we had one restaurant, that was a big moment for us in setting up what was to be the future of how we were going to source all of our protein. At that point in time, we didn't serve any bacon, we didn't have any pork. But when it came time to add bacon to the menu, there was no question of what kind of animal welfare standards and outcomes we were looking for. And that became just part of the specification and the goal from the very beginning. It's very similar with eggs. Eggs are in two different places. You have shell eggs if you have a breakfast menu like we do in some locations, and then you have eggs as an ingredient. And from the minute we started serving breakfast in airports, we started with that in mind for shell eggs and quickly decided, you know what, if we're going to do this for one, we have to do it for all, and went back and looked at our supply chain and figured out how we can do it with all of our sub-ingredients. That said, we were, again, a much smaller company at the time, which makes the transition easier than waiting until your larger group. And it just, again, it goes back to where we chose to be with our protein sourcing, and that being a leading driver of how we source and procure. It also comes back to what tastes great. And we believe that a really great tasting product, which is key, which is what our guests want, which is what we want, starts with great animal welfare. And that good animal welfare results in a better tasting, better eating experience. So they go hand in hand. We try to elevate everything we do with our food. And in order to do that, you need to start with great ingredients. In order to start with great ingredients, you have to source them to the highest standards. So it was just the building blocks that got us to the menu items that we have. And it's been part of who we've been since one restaurant in 2004 to the 300th Shack that we opened 2 weeks ago.
Greg, congratulations on that. That's great.
Thank you.
And notwithstanding financial losses, stemming from the global pandemic, has adopting these policies been beneficial or detrimental to Shake Shack's bottom line? I know some people have been telling us that's just too expensive. We can't afford to charge that much for burgers, so we can't do it.
I think it's absolutely been beneficial since the very beginning. Yes, it does cost a little more, but we also charge a little more, and we charge a premium because we're sourcing better ingredients, and we're not trying to race to the bottom on price or commoditized ingredients. We're looking to bring our guests the best of what we can source, and that's been important. It's not just about finding the cheapest, most readily available. We want to take the extra time and the extra care to build those partnerships with suppliers, with farmers, with ranchers, whatever it takes in order to bring those ingredients within our supply chain to our guests. And our guests then demand the transparency of what we're sourcing. They want to know what it is. They want to feel good about it. And they want to know that if I'm paying a premium, there should be a good reason behind it. And I believe that we bring that that reason and that story to everybody. And it allows us to continue that cycle. It's just a really good cycle to get into. You're not trying to break a bad cycle, you're trying to perpetuate a really good cycle of sourcing.
Thank you for that. And now we'll move on to Bas Roeder, who is Director of Sustainability for Rabobank. And for those of you who don't know Rabobank, it is a Dutch multinational bank that happens to be actually one of the largest financial services providers for the agriculture sector globally, livestock farming. And now, Bas, thank you so much for joining us today. We really appreciate your time and input on this panel. A lot of restaurants have been telling us, as I raised with Jeff, that going cage-free is, or crate-free, or any of these policies, they are just too expensive. Now, as a bank that is actually financing some of the livestock suppliers and meat suppliers, Rabobank has now actually officially encouraged, I think starting in 2018, all of your clients to have transitioned to cage-free housing systems for laying hens and group housing systems for sows by 2025. I've seen a stat from Rabobank that also estimated that it would take about 7 billion, I think it was, of investment to meet restaurant demand for cage-free eggs by that 2025 timeline. Bas, why do you think it's worth your clients' money to make these investments in switching over to these systems and to embrace these cage-free and crate-free policies?
Well, first of all, please allow me to introduce in 1 minute the background of our financial institution, because that is part of the answer to your question. Yes, we are a Dutch bank, but in general, a bank, of course, is an institution that actually transfers money from people who bring it to their savings account to clients who actually borrow it from the bank. And it's important as part of our identity to make sure that the values that our retail clients bringing the money to the bank is reflected in the way we finance commercial clients on the business side of the bank. And the background of our savers, our retail clients, is that they care about animal welfare in general. So it's a logic thing for us to take this topic serious in the dialogue that we actually have with our clients. So being a bank, it's logic to listen well to both the retail clients who bring their money to the bank and to the business clients who borrow the money from the bank. It's a connecting role. Animal welfare is an important topic for our retail clients, and as a result, we take that serious in the dialogue with our business clients. We see that coming across both in the financial space, in the banking space, but we see that topic of animal welfare in a number of markets in which we operate, also in the business lending side, getting more and more relevant. And the background for that is the fact that consumer awareness on the topic of animal welfare, as was already described, by the way, by Rihanna and Jeffrey, is growing. And we do not participate in the upside of companies trying to make a lot of money. We look at the long-term risk side of those clients. And given the fact that these consumer awareness trend, we think, will continue and will become stronger and stronger, it actually adds to the quality of the management of our clients to take this topic serious. We see that when it comes to healthy food. We see it also following COVID, but we'll talk about it later, a very strong trend towards also local foods. And we see it in a long-term trend towards more transparency and traceability. So we see it as a sign of the quality of the management in the supply chain towards these restaurants, to be able where their food comes from, to be able with what criteria it is produced, and to also be able to adopt these consumer trends as the first one in the market in order to be more successful in the long run. So we see taking animal welfare serious as a sign of the quality of management, but it needs to be paid for, and we understand that. And that is also, as a bank, we have those dialogues talking about their investment cycle and understanding that you cannot change your way of doing business over time if you have long-term investments from the history. And as a result, We have an engagement strategy where we talk about these topics. We identify the logic moments in time to make those investments and to have a gradual step-by-step in the right direction, which helps us to lower the risk in our loan portfolio while at the same time taking the interests of our retail clients, bringing the money to the bank as well. So that's the background for doing it. And so far, we have been able to manage those risks above average in the industry following that strategy. So we feel the support to have that dialogue going on in a very constructive manner. By the way, this is not seen as a hostile dialogue, but as some free advice from their bank over time, over the last decades already.
Yes, I was going to ask you, how does Rabobank engage with those clients that may be lagging on some of these issues?
Yeah, we have an annual assessment of the sustainability performance of our clients, which is a relatively detailed exercise in which we have the dialogue with the client. And depending on the sector, we identify the topics to talk about. Well, in animal husbandry or in the restaurant chain, of course, animal welfare is a topic. So we discuss the topic, we analyze the results, and we also identify points to actually make a next step on. And in this case, our sustainability policy framework, which you referred to, is the starting point of our conversation. But it needs to be said, it's a conversation that is focusing on added value and on helping clients to improve their performance as a starting point, not so much to act primarily as the person talking about these topics simply because we have an opinion. We think those go hand in hand, and that is also why we see that our clients respond to us in a positive way. And that is also why you don't see the outcome of the dialogue in the newspaper. It's a confidential dialogue. That's, I think, the nature of a bank, which is sometimes criticized by people, but it's the only way to do it in a constructive manner. But we also see the results from that dialogue in clients moving in a direction and also providing us feedback on the fact whether that advice has actually resulted in the right strategy for the company. And so far we see that also on these sustainability topics, our clients are moving in the right direction based on that annual sustainability performance that we measure for every client that borrows €1 million or more from our bank over time. So we measure it, we see the performance increasing, and we see clients appreciating it.
Wonderful. Well, it's great to hear that your client's on track. You've given them a strong recommendation that they have those policies in place by 2025. So they've got a couple years to catch up, but nice to hear that there's progress there. And thanks for your work on that. Next, we will go to Leslie Samuel-Rich, who is president of Green Century Capital Management. Thank you for joining us today, Leslie.
My pleasure again.
Green Century has a long track record of leveraging shareholder proposals to get action from fast food companies and others. How are these animal welfare policies consistent with shareholders looking to earn on their investments? Does it pay to invest in companies that are committing on these animal welfare policies?
This is a great question for both retail and institutional investors. And to pick up on themes that Bas introduced, many people have heard of ESG or environmental, social, and governance ratings. And those ratings assess a company's risks and performance on the relevant factors. And so for companies that are involved in the animal welfare industry, that this is indeed a relevant fact. And so we touched on a few of them. There are material risks, there are competitive risks, there's brand and reputational risks. And when you use ESG ratings, you can see enhanced performance. And so Green Century, which is a US mutual fund company and does a lot of shareholder engagement, as you mentioned, it's different in the US in part because of the way the shareholder process is structured and our access to companies. And we could talk more about that later. But one of the proxy advisory firms, Glass Lewis, for example, to give your listeners some examples beyond Green Century's position, states that the company should consider its exposure to regulatory, legal, and reputational risks due to its animal welfare policies and practices. Citigroup concluded that headline risks, so when there is an issue that comes out in a headline in the media that endangers food purveyors, include concerns over animal cruelty. A lot of those headline risks come from NGOs or nonprofits who are pressing the company to do that, or expose reports. And even the World Bank IFC reported that failure to keep pace could put companies and their investors at a competitive disadvantage. So we believe, as Bas said, that that strong animal welfare policies have an impact on performance, and that performance has an impact for investors. So we both avoid some companies that are laggards, but for the ones that we do invest in, we work with them to make them better on all these fronts.
And if for those who are listening at home, who are wondering how to make their investments more in line with their animal welfare values, how can they go about doing that? I think Green Century has some tools for them.
We do. I think there's 3 things to keep in mind. One, if you're an individual investor, you need to talk to your mutual fund or ETF company and find out, and go beyond what the name of the fund is called or what the ad says. All the ads are very pretty green pictures these days as firms capitalize on the rise in ESG investing. You really need to look at the prospectus and see, does it ban factory farms or does it not? Or what is its approach? If you're working with a financial advisor, your financial advisor should be able to provide that information for you. A lot of financial advisors who are not familiar with ESG ratings or the products may try to dissuade you from bringing these concerns into your portfolio. And we've heard this from investors across the US. And remember that your advisor works for you. And so if this is something you want to see incorporated into your investments, you both have the right and really the opportunity to do that. And, if your advisor is just unwilling to find that information out for you, there's a growing number of advisors that specialize in ESG or responsible investing that can certainly help you. And so I'd encourage people just to get started. At Green Century, we welcome you to contact us about our investments, and by phone or email, or check out our website, both for what we have in our prospectus. For example, our balance fund does avoid factory farms by prospectus, as well as GMOs, and our shareholder advocacy work.
Wonderful, thank you for that.
Yeah. Of course.
A few of you have mentioned ESGs. It's a term that will be familiar to many of our listeners, but not everyone. And just to touch on those environmental, social, and governance indicators, RBC, the Royal Bank of Canada, just released a new study that found that 75% of institutional investors now say they incorporate ESG factors, principles into their investment process. We're hearing about investors considering the climate, environmental impacts of the meat industry, and some, such as yourselves, that are also considering the animal welfare impacts of the meat industry as an important ESG issue that investors should be considering. At the same time, in my experience, when I was ranking banks, I found, and I was ranking their sustainable offerings to clients, they might say, "Oh yeah, we consider ESG factors," but doesn't mean they actually change their approach based on those ESG factors, or change their offerings too significantly based on those ESG factors.
Right.
What are some of the top things that financial institutions could be and should be doing to ensure that they do help more companies progress on this whole animal welfare trajectory, especially in relation to our ranking? We saw a lot of companies maybe saying they're going to commit to a policy but not acting on it. What more do you think? And this is a question I'll throw out to everyone who wants to tackle it. But Leslie, I'll start with you. What more do you think?
I think investors need to be raising with the companies they invest in. And I think there are different approaches, whether you're based in Europe or in the US. The US tends to be a little more directly and assertive because companies don't always actually take meetings with their investors. So we always ask a company first and try to do it through our analysts and dialogues. But if a company doesn't respond, as you said, we'll file a shareholder resolution either to get them to engage with us, or if they're responding and using one of the examples that companies have had, it's too expensive, our consumer market isn't indicating they want it, we will bring the attention, all the competition is moving, consumer demand is moving, you're actually encountering risks if you're not looking at this, both on animal welfare and on the opportunity side, some plant-based protein options too. So sometimes we will bring that resolution to the ballot and spend a lot of time educating other institutional investors on what they can do. So that is what your investment firms can be doing. It's a little bit harder for individuals to do it, but individuals, at least here in the US, can always vote their proxy to support an animal welfare policy question that appears on the ballot. So I think it's important, and we have been also, animal welfare is not a top issue risk, as I see it, for investors in the field as a whole yet. Climate risk finally has gotten there to an issue. And again, Bas, I know it's actually different in Europe, and Europe is ahead. But I think the more that we talk about animal welfare and animal treatment as related to climate risk, that helps companies and other investors who are not quite with us yet to understand how it's relevant and how it's incorporated and why they should be paying attention to it.
Thank you for that.
Mm-hmm.
Bas, did you want to jump in on this question? What more do you think financial institutions could be doing to ensure that companies move from having maybe just committed to animal welfare policies to actually taking action and reporting on that progress? Not just your own institution, but seeing more action on this around the world.
In the wider context, I think we see that many of the banks that we monitor as our direct competitors are designing these ESG policy frameworks in a rapid pace. We see that consumer awareness is rising rapidly on the climate front, on animal welfare, but also, for instance, on the whole topic of biodiversity and deforestation. So what you see is that the consumer simply starts demanding that their bank is acting on that topic. And what we try to find is to integrate that consumer awareness both with our risk agenda, but also the commercial opportunity agenda for our clients. So we have a dialogue, and I saw a question also, what happens if your clients don't do anything? Well, this is along the same lines with your question. Because we have this dialogue on the topic of animal welfare, but also on their supply chain responsibility, deforestation associated with it, we actually raise the frequency of the dialogue when it comes to the next steps that our clients should be taking if we see that there's a lack of progress. And of course, we have both the carrot and the stick in that sense. So if people are not compliant with our sustainable policies, then in the long run, they cannot remain a client of the bank. But on the other end, and that is something that makes it also attractive to other financial institutions, we see a very rapid rise in the whole green bonds and green loan business within the financial services industry. And we increasingly help clients with loans for which the interest rate or bonds for which the return is related to the performance on ESG. So that means that if they reach targets on sustainability in general, but also on the topics that we describe here, they actually get an interest rate discount at the end of the year if they manage to live up to those KPIs. And funnily enough, the carrot that makes them tick, because usually the topic on sustainability is discussed with the sustainability manager, but now all of a sudden we are talking to the CFO. And as a result, we see that there is a rapidly gaining momentum to link those two. Now, once you have the carrot in place, you see a much broader part of the company moving and integrating those topics in their strategy. It goes without saying that the interest rate on the loan of your bank is not defining whether you will be a long-term profitable company or not. So you need to be very aware what consumers are asking for and will be asking for in the next decades, because many of these investments are very long-term investments. But it does help, and it's not so much the interest rate that goes down a little bit that provokes that awareness, but it's also the fact that we can actually talk about these issues of consumer awareness to the clients, and that help them to actually tighten their policies. We had a brief dialogue on this topic before this conversation, and I gave the example of the large client in Asia that was actually looking into ways to export to Northwest Europe and the United States. And we did get a critical remark from stakeholders saying that one of our clients was actually delivering poor results on animal welfare. So we discussed this with our clients, and at first they were slightly embarrassed because they simply didn't know that this topic was actually popping up at all. But when we discussed it more in detail, they said, well, this is an interesting indicator. If we want to be successful in the markets you described, we need to have an answer to the concerns of the consumers that should be buying our product. So as a result, we went into a relatively detailed dialogue on how they could improve on these topics to actually safeguard their exports for the long run. So now you see them in their markets, and I don't mention names, but as a front runner on these topics in order to help them build momentum in their exports that are growing, and as a result, resulted in a happy client following the critical remark of NGOs towards us, dialoguing with the client and turning it into an opportunity.
Thank you, Bas. Rihanna, are we seeing anything like this coming out of Canadian banks that you're aware of?
It's a great question. I think the conversations have started here. I know I've talked to several of the banks about animal welfare as an important ESG issue, and it's, like Leslie said, it's increasingly becoming recognized as that, but hasn't yet been implemented or integrated into a lot of ESG frameworks. So I think that's something we're going to start to see, and Europe has obviously been ahead of Canada on that front. But I love what both Bas and Leslie were talking about in terms of the kinds of things that the finance sector can be doing, right? They can be having conversations, can be engaging the companies that they work with, either investing in or loaning money to or insuring, to have those conversations about animal welfare being an important ESG issue and what to look for, or also making decisions about how to encourage or incentivize some of those good animal welfare practices. Those are great things to see, or excluding some of the laggards that are not keeping pace with, what is best practice now. And to Leslie's point about quoting the World Bank and the IFC about the risk of losing market share, more and more regions are prohibiting things like intensive confinement systems. So for example, in November 2018, the state of California voted to pass a law that not only prohibits the use of intensive confinement systems, so cages and crates for hens, pigs, and calves in the egg, pork, and veal industries. It doesn't only prohibit using those systems, but also prohibits the sale of items that have used those systems within the state of California. And given that California is the 5th largest economy in the world, that of course has far-reaching implications for other jurisdictions. And the more that we see regions implement those kinds of laws or regulations, the more important it is that companies and producers be able to retain access to those markets. And so what we've created, knowing that the finance sector, so obviously Rabobank is great and very knowledgeable about agriculture, not all financial folks or investors are going to have that level of expertise and knowledge when it comes to knowing what to look for or what questions to ask when you do want to engage a company when it comes to animal welfare. So we created with 2 other international animal protection groups an initiative called the Farms Initiative, and it's designed to have responsible minimum standards for each of the 5 main agricultural industries. So for chicken, eggs, pork, beef, and dairy, we've created a very short but comprehensive list of science-backed, evidence-based standards that can be used to guide some of those conversations in terms of what should be looked for and what best practice is. So I'll share the link in the chat if anyone wants to visit the website. You can download all of those responsible minimum standards and ask questions if you have any, but it's meant to be a tool for investors who don't necessarily know how to go about starting those conversations. And some of those that language can be implemented right into an institution's ESG policy if they want to.
Oh, great. Thank you for that. Jeff, I'm curious, in your dealings with banks and Shake Shack, has the financial community ever engaged in a conversation with Shake Shack on animal welfare in any way?
I'm not directly involved with our investor relations. However, I do know that I spend more time briefing them on everything that we're doing within animal welfare and sustainability within our supply chain. So I would imagine, without knowing directly, that it is a conversation that is coming up more and more with our investors of different scale. For us, it's even if it's just a guest that asks, it's the transparency in what we're serving is important. And it's important to our investors, but it's also important to the communities that we serve and the guests that we serve. So for us, it's everybody that we want to make sure has that information. But I do know that I spend a lot of time now briefing our internal people here on all the great things that we're doing and making sure that we're able to communicate. And we've started to include more of this in annual filings that, and forgive me, I don't know all the technical names of the financial filings that we have to do as a public company, but the ones that we do make, I know have been including more around ESG, not just animal welfare, but everything that we do as a business, since we do employ and touch so many different lives and areas within our business.
Thank you. Now, a question to all the panelists. I'm curious now, with the pandemic that's going on, how has COVID made animal welfare issues more relevant in the era of zoonotic diseases? Does anyone want to take that one on?
I'm happy to start with that one.
Please.
I think as COVID has taken over, people have become hyper aware of their own health and the intake of food, and us being in the business and the industry of supplying nutritious, wholesome food to people. Animal welfare is a part of that conversation. I think there's the animal welfare piece, and there's also just the antibiotic use and overuse conversation that goes along with the animal welfare conversation. And as people think about their own personal health, how do I survive this? How do I be better and learn from this? What we consume and what we put into our bodies is very, very much top of mind. So I think it has brought more of a light to it. And, for us that serve that kind of food and source that kind of food, it has helped differentiate us even more during this time.
Thank you. Now we have a question from the audience. Sorry,
Can I add one thing, Adria, on the zoonotic issue? And it branches off from animal welfare, but more animal welfare for animals in the wild. And so we at Green Century, we spend a lot of time looking at deforestation risk, which is the second largest driver of climate change. And so as agricultural commodities encroach on tropical rainforest or forest, they're pushing out habitats for endangered species and increasing the likelihood of contact with animals, from which obviously the diseases can jump to humans. And so I have been talking about and waiting for it to catch on that we as investors need to look at pandemic proofing our portfolios, and particularly looking at the companies and where they're engaged and what kind of supply chain issues they have around deforestation, because that is a direct link, not to the chickens and pigs and cattle that we've been talking about necessarily, but to the orangutans and other endangered species out there. So I do think that there is an increased interest in that. And I hope people and institutional investors keep that in mind as we move forward, hopefully out of this pandemic eventually and into the future.
Thank you for sharing that. Excellent point. And yeah, absolutely. I mean, the feed, right? That for those who aren't too familiar, or the beef feed that goes to our livestock often comes from deforestation in places like Brazil, right?
Especially, yes, it's that and cattle production are driving the deforestation, which now, is spreading into the Cerrado region in Brazil, but now under the current government there, everyone knows about the Amazon fires and how much destruction is happening there, principally for, soy production. And so investors can look and see if the companies in which they're investing in have a zero deforestation policy, which would prohibit them from buying, growing, or trading the soy that is grown in those areas. So that is an important part to look at. We're obviously big proponents of zero deforestation policies and been working with global investors to forward those among global companies as well as US companies.
Thanks for that. Toby, did you want to jump in with some audience questions while we have a couple minutes left?
There's a question here about the integrity of the information and all these ratings. And there's quite a bit of these ratings. Not many of them are that transparent. That's one area we try to make a difference. But a big issue we encounter just as a rater is a lot of this data is not audited, even if it's around things like cage-free or broiler chicken policies. And I'm wondering, this is a question, I guess, for all of the panelists, just kind of projecting the question from the audience. Is there something that needs to happen systemically from a regulator perspective so that we have better data on these core issues for particular industries in terms of more reliable, comparable, audited information?
We had consulted with SASB on relevant agricultural and animal policies, and we encourage companies and firms to adopt that. There are so many now reporting places. I mean, we rely on CDP a lot for our zero deforestation work, but there are, I am sure Shake Shack and other companies would say that there's just an increasing number of places to need to report, and it can get confusing for companies. So I do think that both either European or US standardization would be helpful.
And if I can add to that as well, I think, regulators absolutely have a very large role to play here. In places like Canada, there's actually a lot of this that is just not regulated. So most of what happens on a farm in Canada in terms of farm animal welfare goes unregulated. So we definitely could see better introduction of laws, enforcement of laws, oversight of implementation. There could also be funding made available for things like transitioning to better, higher welfare systems. And then I just wanted to quickly touch on the previous question about COVID as well. So I think we saw two major things happen this year with the pandemic, right, in terms of public perceptions of the industry. We saw a lot of issues with things like COVID outbreaks at slaughterhouses and a lot of animals being killed for no reason because they couldn't be sent to slaughter in time. So I think that really heightened consumer awareness of some of the industries or the issues that exist within the industry. And I think that's why we're seeing an ongoing growing interest in things like plant-based proteins. But when it comes to the zoonotic diseases in particular, we actually just released a white paper a few weeks ago. I don't have the link handy, but I can share it after this, or anyone can get in touch with me. I just posted my email in the chat if anyone would like to request it. But basically talking about how industrial intensive animal agriculture is a potential breeding ground for a lot of viral pathogens. And in fact, there was a report from the United Nations Environment Program this summer that actually said one of the key human activities that is most likely driving the emergence of zoonotic diseases is the quote unquote increasing human demand for animal protein. So there is certainly a direct link between what we're eating and public health and the chance of us finding ourselves in another pandemic in the future.
I think in general, it's good to have high quality data. And I have the experience myself as a Director of Sustainability of a bank that we need to also get our figures of our sustainability report audited. And it's a pain in the neck when you start it, simply because they always ask the questions that you had hoped would not come. At the same time, it does help to actually make sure that the figures are right. And what we see in many of the topics that are popping up these days on non-financial risks, that people are simply waiting for comparability. We want to be able to benchmark. And if whether it's climate on the task force for climate-related financial disclosure, or it's biodiversity with the new task force for nature-related financial disclosure that we're active in, or it's in general non-financial information that we need also in order to report back to our clients how we actually perform, it needs to be good data. And I am not seeing regulation as an aim in itself, but as a bank, I want reliable data in order to manage my risks properly. And if my clients can make that, something to believe in, credible from a different way, I'm fine. But credibility and comparability and completeness are a precondition for proper risk management. So if we can find a way in which that is achieved with minimum hassle for a client, I'm fine. But that's also what I talked about in the beginning when I talked about traceability. I think it's in the interest of our clients to know exactly where their food comes from. It's where the feed comes from for the animal husbandry companies we finance, because we want to be able to provide safe food, and we want to be able to live up the expectations of different consumer demand. And if you know where your supply chain comes from, you are able to respond to those changes better. So proper management of a firm includes traceability, includes proper reporting, and also for a bank minimizes the risk. So I'm in favor of high quality data that are collected in a very efficient way. And I think new technologies like blockchain really make things a lot easier. So I would advocate our clients to come up with reliable, detailed data from their supply chain in order to manage those expectations from the consumer in a professional manner.
Thank you, boss. Now we have time for one more question. I propose this to all the panelists. I mean, you've mentioned some of your wish lists already, but if you could pick one thing in the next 5 years that you would love to see happen to advance the power of business for raising animal welfare, what would that be?
It seems like too easy of a question. We'd like them to adopt animal welfare policies around gestation crates, cage-free eggs. We'd like them to manage those risks and also expand their offerings by exploring, whether through their own product development or acquisitions, plant-based protein offerings. And then I would also make a plug for a related, though different issue, that we would like farms to reduce and eliminate the use of non-medically important antibiotics. People rely on antibiotics to keep us safe and healthy, and the vast majority of antibiotics are used on animals in many unnecessary ways. And so particularly when antibiotics are being used now to treat complications from COVID and then other diseases and illnesses, this is really a public health threat that I think companies need to be paying more attention to.
Yeah, I would say uniformity of standards across the globe, the things that would make this easier to achieve. And I look at, we were talking that there's some in the chat before about the Better Chicken Commitment. I think one of the great things that happened amongst the different animal welfare groups is that they agreed on a standard for all restaurants to try to achieve. So instead of maybe aligning with one group standard versus another, or figuring out which is the right one, there was one standard that didn't matter which animal welfare group we were talking to, we're all talking to the same standard. And that makes the conversation a lot easier and clearer on what the goal is at the end and how we all achieve it together, whether it's the end user, whether it's the producer, or the animal welfare advocacy group that's helping us get there. That's the most helpful for us. And that would be our biggest push, to have alignment globally on on this. And cage-free is another good example. I mean, you have states, it's a patchwork of what some states are doing, of what California's doing versus, forget all the, I think Ohio had something going on, Massachusetts, and those aren't all in alignment. So then as operators that operate in multiple states, it becomes a challenging framework to navigate.
Thank you for that. And I know we're running low on time, so we might go a minute over, but Bas, could you jump on that?
Yeah, I would love to see a race to the top between banks on this topic. So I would love to see more players involved, and I would love to see us competing on having the best advice for clients to manage these issues properly. But it's a little bit lonely. So, it's great to have pre-competitive initiatives next to niche players that would like to distinguish themselves on these topics, in addition to a broader movement where everyone moves in the same direction. And I think that's the way in markets it works to improve things. But you need a certain percentage of the market to be interested in the topic in order to create that momentum, both pre-competitively and in the race to the top. And I believe in both. So I would welcome any competitor to try to compete us.
We look forward to that as well. Thank you. And Rihanna, would you close us out?
Yeah, I would love to. I think that that graphic that Toby shared at the beginning with your findings, I would love 5 years from now to see 100% across the board. That would be wonderful. And to have more companies on here on future webinars talking like Jeff did about how animal welfare is part of a company's DNA. It's part of everything that they do. It's not just some add-on, some last minute consideration. It is integral to their business. So that's where I would like us to see it, like to see us in 5 years.
Excellent, thank you. And Toby, did you have any final words before we part?
Well, ditto on what Rihanna said, and we'll be tracking it for each of the next 5 years. So in 5 years, hopefully we can come back and maybe have 100% and go celebrate with a plant-based burger.
Wonderful. Thank you everyone for joining us today on our panel as well as at home. We really appreciate all of your insights on this, and thank you for your questions. Hopefully we've answered most of them on the side, and if we haven't, we will try to. And enjoy the rest of your day.
Thank you.
Thank you.
Thanks very much.
Thanks.